Hey everyone, it is Evan here from the Trade Risk on Tuesday, October 1st, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So it feels good to be back. Missed all of last week's videos, which is a rare occurrence, but was traveling for some trading conferences, in-person meetings. Turned out to be great, but back home, back in action, and ready to kick things off here once again with our videos. So jumping into today's action, it was a nasty day out there for the bulls. We were lower by about 1 to 2% here, right across the board in all of the major indices. The Russell 2000 getting hit the hardest, down 1.91%. Nasdaq 100 trying to be resilient here, just down minus 0.85%. That leaves us in the red here firmly for the 5-day change numbers, and you can see we are now back below the 10 SMA and the 50 SMA across all of the major indices. If we scroll down a bit further here and take a look at sectors, you can see mostly askew to the negative side here, with just the staples and discretionary as well as tech trying to stay up here in just slightly green to marginally green, while biotech, energy, and transports underperform and lead to the downside. In terms of major markets, it's volatility getting a pop here, 7% to the upside. Not a big pop given the downside movement we've seen, but still getting some rotation there. US dollar followed in second, and also 10-year bonds. On the downside, we have natural gas, we have silver, and we have USO commodities really getting hit here pretty hard right across the board on the downside. So if we jump into the charts now, take a look at the action on the S&P 500. It's funny. Posted a chart yesterday on StockTwits and Twitter, kind of outlining the key sort of level that I'm looking at here for the major indices, and very quickly we are suddenly back to testing those areas. Posted yesterday saying cautiously optimistic so long as we can hold above this 2940, 2950 area, and you can see we came slamming right back into it today, and that of course is not a good sign here for the bulls. So let's first, before we look at that daily chart, go back to that weekly chart. So this is here how the weekly candle is forming. This is where we like to start our analysis just to get a high level view of the bigger picture structure here. And what we can see is that this market has slowly been pulling back off of these nearly all-time highs they made, but just back up towards resistance here just 3 weeks ago when we tested that 3022 area in the S&P 500 cash market. You can see we've since been pulling off in a pretty orderly fashion, but this is where sort of the rubber meets the road is the way I look at it, because we are retesting now the breakout area from just 5 weeks ago. So when we had that nasty August volatility and that very choppy sideways trading range between, you know, about 28.20 all the way up to about 29.40, that's where we ended up breaking out. We resolved that range to the upside in the first week of September, and that is where we want to see bulls come back in and defend this market. We would like to see it, you know, in the bull case, to keep this market acting as strong as possible, a higher low and a successful retest of this breakout occurring pretty much exactly where we are trading right now. I've been calling it the 2940 to 2950 band, somewhere in there in that general area, which is exactly where we closed today, is where I would want to see this market start to take a stand and see a quick reaction to the upside. If that doesn't happen, if we continue to slide here, if we fall back into this range here, that I think opens us up to some bigger downside levels and really puts us in a much more sort of cautious landscape for the market as it fails at these prior highs and then rolls over back into the August level, into the August trading range. That, I think, would be pretty ugly here if we start to see acceleration lower and more technical breakdowns below this 2940 sort of slot here. So right now, again, this is where I think it's going to be important to see how the market reacts here in the coming days this week. How do we finish out this week? Do we just get some brief intraday undercut here and then a strong reversal, that could be a good successful retest scenario for the market. Otherwise, if we just continue to slug lower here and close weak, that's going to be a much more pessimistic view for the next several week outlook for the market. So as it stands, remember, we are still just 2.5% off of the, pulling back here off of recent highs, call it 3% from all-time highs. So we are still in very shallow territory here of where we are relative to all-time highs. So we do have to keep that in mind. However, we just want to see now this market start to respect some of these prior technical levels. 2940 is one of them. So that's the weekly outlook there, kind of looking to see right now, all eyes pointing closely to this area here. We have successfully now kind of filled this gap in here from the breakaway back on the 5th of September. And now again, we just want to see how the market reacts around here. This is the daily view of it. Again, we can still have kind of this optimistic view, optimistic looking consolidation, pullback, flag, however you want to label it, after the strong breakout move, after the strong move from, the sub 2850s all the way up to 3020, a 35% pullback or so. That seems entirely reasonable. We just need to see if that scenario starts to unfold. The longer we, if we start to close below here and we start to get successful consecutive closes, the more worried I would become with that outlook. You can see the MACD starting to cross back over now. It's still just barely in positive territory, but starting to inch back lower. And again, that's sort of the landscape there for the S&P 500. Now, the Russell 2000 looks entirely different here. Of course, this is nowhere near its all-time highs. The way I sort of look at this is, at this point, this 160 area, 159 area, it's pretty much like its all-time highs. It's multi-year resistance at this point. The market's been, the Russell 2000's been below it and chopping around for quite some time in this sideways range. And you can see, of course, we failed up here several weeks ago, like the S&P 500 failed to make those new highs. The IWM failed to break out. It had this very promising sort of breakout or the heavy volume move here as it started to ignite from this August range. So it had this very promising look here, but then it totally failed and just has been fizzling out in mostly light volume until, of course, today, where we saw a heavy volume day as this came slamming down 2%. It did now just fill this August gap here. So it is now in, successfully filled that gap, but it is at the lower, mid to lower end of this range now. So much more of a difficult spot here for the Russell 2000. Would have been ideal for this to hold in a much more shallow pullback, above 155, but that, of course, has not happened here. So once again, we're left with sort of some underperformance and some lackluster results out of the IWM bull case. Now, on the flip side, we have kind of the Nasdaq 100, which is in fact still trying to hold green so far. Of course, it's only Tuesday, but it is still in green territory here. It hasn't gone red yet like the rest of the major indices. But when we look at its technical picture, it looks very similar to the S&P 500. It failed to make new highs here back about 4 weeks ago. It's pulled back. It's kind of faltering and falling back below this August range here. It is still showing signs of trying to hold up. It didn't make, again, new closing lows here in the short-term downtrend. So there's a slight outperformance here on a very near-term basis. But the Qs are going to need to reverse course pretty hard here to, really put together any type of strength or leadership role. This looks, again, very similar to what the S&P 500 looks like. So that is the landscape there right across the board in all the major indices. We still got these pullbacks. The pullbacks are deepening, but we're at some pretty critical retest zones, and we're going to need to see if buyers can step in here as sort of a last line of defense for this short to intermediate term price action. So if we move into some of the other major markets now, we got TLT here, which is continuing to kind of hold up and bounce off of the lows here it made for the first several weeks of September. It traded down to about that 137 area, 136 and change. It's been bouncing. It bounced today back up in this recent trend here. So kind of in a weird spot. Don't really have too much of a strong opinion one way or the other. Longer term trend, of course, is still higher. And right now in the short term, that trend is higher as well. If we look at gold, gold also staged a little bit of a reversal here today. It's kind of in that interesting spot as well, where it had this very strong kind of second quarter, first, second, third quarter, and now it's starting to pull back a little bit, starting to unwind a little bit of that froth that we saw throughout July and August. It has been pulling back here, staged a small reversal, but mostly still kind of sideways to lower here in the short term. Silver as well last week really started to pull back. It reversed here today. It got as high as this 18 and 1835, and it is already, as of yesterday's close, it was 13.5% off of those highs that it made just about a month ago. So that's a pretty sharp move, pretty fast. It was a fast move up in July and August in silver, but then it was a pretty quick unwind here as well, 13% trading off of those highs. Kind of stuck in no man's land here. We'll need to see if this higher low can get put in just under the $16 area. For now, looks like kind of a battleground here for some type of higher low. Last but not least, if we look at energy, USO now has given up all of its pop and then some when we had that big move, that 15% up day on the supply cuts there, or really not supply, forced supply cuts to say the least, I suppose, back on Monday the 16th. We can see that this just really after that pop has bled lower. It's back to kind of the lower end of this consolidation here. And again, don't really have too much strong opinions or excitement about this market. It's at the lower end of this range. It's sold off now pretty steady, so maybe there's some reaction around this lower 11s area, but for me, just really kind of just in a do not touch and just watch sort of state here for USO, really, which it's been in for the past several months for me. No real interest in trading this, although there is, certainly been some two-way volatility here on perhaps that shorter term time frame. Last but not least is natural gas. Natural gas potentially trying to do a full 180 here. This had this very strong move off of the August lows here all the way up to about 23 and change. It has since now pulled back about 17%. About 70% of this move has been retraced now. It's been pretty much a straight line back down, no higher low in sight. It is stretched here now to the downside, but of course, without a higher low and with all these bigger, longer, dominant trends to the downside, we need to be careful here in natural gas as it has lost that swift momentum that it had throughout August and into the first weeks of September. So that's where we find ourselves. That's an update there. We're back in action here going forward. We'll be back on Wednesday with some trade ideas, Friday with a weekend recap video. It's good to be back. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel, follow us on the Trade Risk. Have a great rest of your day, and we'll see you on Wednesday for the market trade ideas during the day.